For a company of our size to have such a large land package in and amongst majors, there's very few places on the planet where we're going to be able to do that. The end game for us would simply be, we're able to define something of size and merit, and we'll have a suit.
What have you got? What do you think you need to get it to before you can have a meaningful, proper conversation with the mid-tier that says this is something that you need to get involved with?
I can tell you right now, we've already had discussions.
Well, everyone's talking all the time, but what meaningful discussions have you got? Hello and welcome to Crux Investor. First of all, thank you so much for watching this video. If you like it, give us a thumbs up and do leave your comments below. It helps us understand what questions and thought processes that you're going through, and we do try to get back to everyone. And if you haven't already done so, please click the subscription button in the corner of the screen. And for more videos like this, click the notification bell. We spoke to Alex Klenman earlier today, the CEO of Nexus Gold Corp. They're a Canadian gold explorer. They've got assets in West Africa, Burkina Faso. They're trying to raise the money to actually advance those. They're stalled at the moment. They've also got some properties, 5 to be precise, in Canada, and they're looking at format models for that. We talk about strategy, driving shareholder value, fairly flat share price over the last 2-3 years, and we kind of get into the reasons why. We also look at a number of other topics. Take a look below in the description. You can see some of those topics. I've got timestamps against them. If you click on that timestamp, that'll take you to that part of the video if that particularly interests you. Otherwise, let's hear what Alex had to say. Hello, Alex. How are you, sir?
I'm very well. Thanks for having me.
So you are locked up at home, are you? You're under quarantine.
Yeah, we're all going through it. It's okay. We're on like day 14. We've been sort of sticking close to home for quite a while, and yeah, you find yourself staring out the window, having thoughts you never thought you'd have, but got to roll with it.
You still married?
Yeah, 35 years.
Well,
this won't break it.
This won't break it. Okay, I'm glad to hear that. Okay, Alex, why don't we kick off? Give us that 1-minute summary, and we'll pick it up from there.
Absolutely. Well, Nexus Gold is an explorationist. We're a gold exploration and development company. We have a number of assets split between Burkina Faso, West Africa, and Canada. We're somewhere between early stage exploration and advanced stage exploration. Our goal is obviously something between discovery and delivering a resource estimate. So we'll get into where our assets are and what our plans are, but that's the long and short of it right there. Okay,
so today, 4.5 million market cap, exploration company. There's a lot of exploration companies out there. So what we're going to try and do today is work out what makes you different. Okay, so if we don't mind, can we just start with some of the numbers so it gives me a sense of what you're capable of doing when you're talking about those things. So how much cash have you got today?
About $500,000 in the bank.
$500,000 in the bank.
One of the things that we deal with as an exploration company is we're always raising capital. That's always we're on a tightrope. We're always walking on the ice. So we've been, we managed to do it. We have some good backers, but that's always, if anything keeps me up at night, that would probably be it.
Right, as with all explorers, absolutely. So, just give me a sense of this, because when I was looking you guys up, obviously, I'm looking at share price over the years. I mean, it's been, tough few years and a tough few months for you guys.
Sure.
What was happening in 2017? Because the share price was around sort of 350.
Yeah, well, that was unfortunately what you see there is a pre-consolidation price. So our top was really about 35 cents Canadian.
Got it.
After the previous management was jettisoned, we were left with no money in the bank. I was chairman at the time, so I had to reshuffle, became president and CEO, sort of took over. We had to do a 10-to-1 consolidation. So what you're seeing is the pre-consolidation.
Got it. Okay. That explains it for me. I should have done way more homework, but I didn't. Okay, so you've been in charge since 2018, 19, and now into 20. So
Correct.
What is it that you've
Correct.
been trying to build? Because again, share price has not really done much. Bump between 4 and 10 cents.
No.
So,
we've had our problems.
Yeah. So talk through those.
Really, I think. Yeah, really where I think things started to go wrong was the end of somewhere towards the Q3 2019, pardon me. It was a brutal tax loss season. We had some traders in our market continuously pushing our share price down. But our strategies, I think, a big disconnect from where our share price is. Really, as an explorationist, we have our assets in Burkina Faso. That was our main point of contact with retail. In 2019, we decided that we wanted to hedge our bets and open up our portfolio to other jurisdictions. One of the objections that I would always get, it may not be so much on the European side, but in North American investors, we're always worried about Burkina Faso, jurisdictional concerns, geopolitical concerns. We're always at the forefront. And 2019 was a bad year for Burkina in terms of news flow. So that affects us as an explorer, sort of tainted with that brush, regardless of how close we are to any, nefarious activity. In any case, what we wanted to do was increase our exposure outside of Burkina. So it gives us a hedge. What happens in Burkina is if they have some bad news, there's usually a 60 or 90-day dark period, maybe 120 days. And then things kind of go back to normal. But during that time, share prices would take a hit, or I'd take 100 calls from investors saying, why are you only in Burkina? So what we managed to do in 2019 was really add to our portfolio. We've got 6 projects now in Canada, and one of them in Red Lake, which is a beautiful place. So with that in mind, we have our Burkina assets, we have our Canadian assets. We've built our portfolio. We think our portfolio is very strong in terms of exploration. So we think the value there is to be unlocked moving forward, particularly in a good gold market, which by all accounts we're heading into.
Okay, so just help me understand this, because obviously West Africa does have its problems. Burkina especially, you're talking about terrorist incursions there, and people like Semafo have suffered, I think there's a significant loss with workers on the way to work being shot and killed. And it's escalating by all accounts. So is your idea, and I appreciate when I ask CEOs this, some run and hide and duck for cover, and I get phone calls from IR companies telling me to stop asking questions. But just tell us, you did give us a clue there. You're saying it is business as usual there for you, I think is what you're inferring. Okay, so but your exploration, so that's probably likely to be the case. I think production perhaps may be targeted. So what is happening in country? What are you spending time and money and effort doing in country?
Certainly. Well, I'll back it up and give you a more broad answer, and maybe we'll hone in on a couple of points there. Our feeling is, look, the list of majors, the list of larger companies in Burkina is quite long and impressive. So for us, we're not going anywhere if they're not going anywhere. We serve a particular function there. We have 750 square kilometers of land, which is a very large presence for a small company. But as long as, ironically, you mentioned Semafo. They had that horrific situation. And less than 6 months later, they've been acquired. That was the recent news with Endeavor. So these things happen. It's part of the lay of the land there. But for a company of our size to have such a large land package in and amongst majors, there's very few places on the planet where we're going to be able to do that with, as you mentioned, a $4.5 billion market cap. So important that we stay there. We continue to develop our assets. The end game for us would simply be, we're able to find something of size or merit, and we'll have a suitor. Well,
let's talk about that, because you've got to create value for shareholders, right? And you're going to do that by, well, why don't you help us, first of all, so if you, again, so backing up to use your phrase, is what is it that you're trying to be? You've got multiple assets now in Canada as well, which is great, but you've got this property, large property, Boobaloo in Burkina Faso. What are you going to be able to do? What are you going to try and do? Are you going to say, we will build out a resource and hopefully someone will come along and take us out? Are you going to just sit there and wait for someone to say, actually, we want to acquire the land package? I mean, you're not mine builders, are you?
No, we're explorations. It's a great point. There is 100% a major difference. And people say to us, do you want to become a miner? We'll always say, sure, we'll push it as close to that line as we can. But other than Ian Stalker, who's our non-executive chairman, we're not miners. We're explorationists. We need to be able to go out, define something, and then perhaps look for a suitor, look for a buyer, whether it's a buyer of our Burkina sub, whether it's a buyer of one of our projects. That's really our end game for our Burkina assets.
So how much have you spent on this to date?
Oh my goodness. We have spent, probably in the last 4 years, two and a half, maybe $3 million on all of our assets in Burkina. So we're pushing them forward, multiple drill programs. You mentioned Boobaloo. Boobaloo is our most advanced project. It was once a Rox Gold project. I used to work at Rox Gold. Our chief geologist, Warren Robb, was their chief geologist. That's how we met. That would have been about 2011. So Boobaloo used to be called Bisa West when Rox had it, play off the Bisa mine, which is the Nord Gold mine, not too far from that concession. So it's had multiple drill programs. We've delineated 5 different mineralized zones. We believe we have an asset there. We'd like to drill probably 30, maybe 40 holes, maybe less, away from actually being able to deliver a maiden resource.
Right.
So that's one of our priorities for 2020 up until this black swan, if you will. We're very much committed to delivering a resource at Boobaloo. That's our most advanced project.
Right. So you spent, say, $3 million on this to date, $4.5 million market.
On all of the assets in Burkina, not just
on
Boobaloo,
all. Okay.
but
okay.
Different. Yeah, on all of the assets.
Do you feel delivering a maiden resource will move the dial? Do you think anyone will notice or care?
I think it's important because as an explorationist, your value is largely speculative. The market says we think you're heading in this direction, and you have an assumed value for what you may or may not have. By delineating an asset, by being able to bring it to the market and say, here's our maiden resource, we now have an actual anchor on our evaluation. So I think it's important that we...
Sure, but a lot of companies said that last year and nothing happened. No one cared. People just, looked at it, moved on to the next thing, right? And you're a small company, so even less reason to look at you, right? So, how do you, as a CEO, think about this when you say, right, if we're going to deliver a maiden resource, what's that need to look like? It's got to be 1 million ounces plus, presumably, right? I don't know what grade. Well, I know the region generally, and the grades, can be very good, like Rox Gold, setting up around 8-9 grams per ton, but it can generally be...
Yaramoko is remarkable.
Fantastic. But it generally 1 to 3 grams, right? Typical?
Absolutely.
Right. Okay. So what's your expectation? What's your expectation?
Yeah, no, I'm glad you brought that up. Again, these are good questions. We look at it this way. Having that asset, is obviously it's a maiden resource, and it would be expandable. We also control the neighboring package, Rukunga, which is about 250 square kilometers. So there's a large trend that we've also done a joint venture deal with another company on Rukunga. So they'll be putting money into it. But I think between the two, there could be something of even greater size. But even bringing 200,000, 300,000, 400,000 ounces to us at this point in time. Now, what you mentioned earlier was, 2019, companies bring assets to market, and there's a collective yawn most of the time. The majors and the larger companies in Burkina aren't yawning; they're watching. So the retail market may say, okay, nothing great, this isn't outstanding, but we'll move on to more shinier objects. But for us, the important thing is to make sure our neighbors in Burkina know who we are and what we're doing. And by bringing that asset, whether it gets a yawn, and I don't think it's going to get a big yawn, especially now with gold heading towards 1,800, or perhaps as high as 2,000 or more, as people like to say right now.
I think I know which programs you've been watching. 2,000, really?
Yeah, sure. Oh yeah, I'm hearing all sorts of crazy numbers.
You're a Kitco fan.
Yeah, well, you can't not be inundated with these optimistic things at this point. But we are seeing a stronger gold market than we have seen, clearly. Now, whether there's any cash in the market to take advantage of that, listen, I'll take the higher gold price. I think that's good for us. It's good for our side.
It is, but let's deal with reality here. Okay, let's deal with reality. Okay, so you are beholden to your shareholders. They gave you the money. You need to report to them and let them know what it is that you're planning to do. But you're talking the language of The way that I'm going to get people's attention is by making sure that the majors or mid-tier guys understand what it is that we've got here. And because we're just explorationists, we want to be taken out at some point. So can you paint this picture of what have you got? What do you think you need to get it to before you can have a meaningful, proper conversation with a mid-tier that says this is something that you need to get involved with?
Sure. I can tell you right now, we've already had discussions with mid-tiers and larger companies.
Well, everyone's talking all the time, but what meaningful discussions have you got?
Well, I'm not at liberty to really discuss the details of the conversations. That would be, that's gray territory. But I will say, you look at just having the asset. Listen, we're always the great thing about an exploration is much like, and I hate to use the analogy, we're much like the gambler with the dice in his hand, or the cards in his hand. Whereas we're one card away, we're one roll away, we're one drill hole away from something spectacular. So we live in that world. But we all know that's highly speculative. We also know that the percentages are against us. However, many people do and are attracted to this part of the business we're in. So we cater to those people, and we're always close. We're always feeling it. And we had early on 2017 with Nexus, we had one drill hole that really changed our trajectory at the time. You can look at our chart. This was early in 2017. We had a nice number back at one of our projects. Didn't turn out to be what we wanted, but that's the game we're in. Nevertheless, I think the combination of having the potential of that drill hole, whether that's at Dakuli or Boobaloo or one of our other projects, or at Red Lake, for example, is always on a part of our mix. Whereas at the same time, we have the advanced project that we can develop ounces in the ground. So we're kind of working both. Listen, and I won't rule out potential acquisition of ounces in the ground. We've been looking for a period of time, and there is a potentiality there where we find some sort of a deposit with plenty of objections or warts on it that it's discounted because of those warts. We can acquire that, potentially spend our time and capital removing those objections or removing those warts, being able to unlock the value that's already.
You're in a very competitive environment there. People with money are looking all the time for deals. Okay, there are no deals. You pay for ounces in the ground. You pay a premium for ounces in the ground. So let's be realistic. So what is your realistic strategy for delivering something in Burkina Faso as the market stands today, whether it goes to 1,800, 2,000 I think is irrelevant. What can you do today? Talk about things that you can control.
Right, two things. Number one, we are committed to delivering that resource, that maiden resource of Boobaloo. That's a priority. There's another project we have there called Dakuli 2. Dakuli 2, as we had Dakuli, as we moved into Burkina, we wanted this project years ago. Couldn't get it, it wasn't available. We put an application in with the ministry, got it last year finally. It's a 9-year mining lease, it's ours 100%. The orpaillage, or the artisanal presence, has grown to about a 400 to 500 meter strike. The length has grown. They're going down about 80 meters. That's a good sign. They're telling us that there's a mature system here. It's going deep. There's gold, obviously, and we have yet to drill it. We would like to drill that. That's one of our priorities. We think there's a discovery waiting to happen at Dakuli. So between the Dakuli project and Boobaloo, we think our Burkina presence is sound, and between those two, I think we'll be able to unlock some value that's great.
Okay, you're going to need some money. Because right now, what are your liabilities in country? What do you need to pay out this year, but even before you start drilling?
Yeah, very little. Probably about 150,000 US that we have to pay out in terms of option agreements and things like that. But everybody's willing to make concessions at this point in time, so there's no hard obligation. And we do have backers. I mean, we can meet our short-term goals in terms of the finances on the ground.
Okay, but backers stop taking phone calls when times are tough. I've been there. I've invested in West Africa, and I'm sort of conscious of some of the pitfalls here. So you've got 150, which when you've got 500 in cash is a lot of money as a percentage, right? So you are going to have to go and talk to the market and say, look, I've got a plan. We're going to do what this year? So please give me, I don't know what you're looking for, 2, 3, 5 million bucks to deliver that plan. So can you talk me through that process? That interests me.
Before this all began with COVID-19 and the market crash, we were in discussion with a private company that had just gone public and were raising money. They wanted a piece, Pubco, Priveco then went Pubco.
Okay.
They wanted a piece of our Red Lake project, and they still do.
Right.
So there's an ongoing negotiation where they would make a capital influx into Nexus, and in return, we'd give them a piece of our Red Lake project. We'd be able to take that cash and put it into our Burkina assets for the development, specifically at Google.
And that feels the right thing for you to do. Because, I mean, I know you spent money there, and sometimes you put good money after bad, but you feel that would be a good use of capital. How much money are we talking about?
Somewhere between $500,000 and $1.5 million.
Okay.
You have, I can tell you that negotiations and discussions have really stalled, but everybody's committed to following this through. I think there's this sort of a 60-day window here where we're all locked in our homes and we're not doing much in terms other than having discussions like this. We sort of pushed it out a couple of months. So, that's just one of several different initiatives we're looking at. We have a potential credit line. We have the people who've been financing us, believe it or not, see the discount, see the situation as being a great time to re-up. Now, whereas we might have been able to raise $1 million, 2 months ago, maybe that's $500,000 today. But keeping the company moving forward, keeping the game in play is our priority, and I don't see any danger. And listen, I am a worst case scenario guy. I always work from that mindset. With that mindset, you're usually prepared for whatever comes out of left field, and I think that's the best way to proceed, particularly in this type of.
Okay, I appreciate the market is tough at the moment, and sometimes the best thing to do is do nothing. Okay, so I do appreciate that, but it just interests me. Okay, I get that you're having conversations. They've stalled. Thanks for being honest about that, and there may be other conversations, but that's all they'll be in the current climate. But when the market comes back, and it will come back, what will you do with your $500,000, $1 million, $1.5 million, whatever the number is in Burkina Faso? Sure. And what's your expectation that will deliver for you? Sure.
If I had that million today, we would split it 70-30 between Dikuli and Bouboulou. We think we're $1 million away from that resource of Bouboulou. So I'd like to split. I'm an explorationist. I want to try that drill hole. I want to put a drill hole down at Dikuli. I want to see if Warren, our geologist, is right. I mean, he was the chief geologist on the Yaramoko discovery. So he can recognize these above ground situations where you go, hey, I've seen that before. The pyres are there's a lot of them. They're going deep. What they're bringing out of the ground. We have a crew in Burkina who are telling us what these guys are pulling out of the ground. We really want to put a drill hole down. So, yeah, when I say if I had that million, I'd put 30% at Dikuli. I'd put 70 into developing Bouboulou, because believe it or not, even 250,000 ounces, even a small deposit that's expandable at Bouboulou will get attention, and it'll get attention from the lake.
Yeah, I think if I remember correctly, Rox Gold, I mean, theirs was 400,000, but they were high grade. They were 8-9 grams per ton sort of level.
Right, and I was there when they got that first email showing the visible gold at zone 55 or the 55 zone, which was really the 55th hole they drilled. It wasn't actually a zone. It was a step out hole. And I believe it was 16 meters of 60 grams. And when you get that type of a number, it's game changing. But I always like to say, we were there for that. We saw that. Our geologist was the guy on the ground putting the holes in the ground.
Okay.
Have some credibility in terms of recognition.
Okay, well, let's park up Burkina Faso. I think it's obviously early days. You're in a kind of holding pattern is reality, but you're sitting on a lot of real estate, that's how you like to call it, and it's a kind of prolific area, and you're surrounded by the right guys. It's a question of, can you raise the capital to be able to do anything without diluting the heck out of your current shareholders. Let's come to Canada. Now you've picked up some. What are they, options, or what have you actually picked up?
No, 100% ownership.
100% ownership.
100%
Okay.
ownership.
Cool. What's that cost you?
Mostly just shares over the cost of 2019. I think the most we spent on a project was the Red Lake project. I believe it cost us about 150,000 on the acquisition and some shares.
Okay, so what's the
most have been shares.
right? What's the plan there? You're talking about Red Lake, but you've got a few other assets. Again, what type of company are you trying to be? Are you going to just farm these out, having picked them up? Is that the plan, or do you think you can?
Good point. Yeah, part of our plan is to become a little bit of a project generator. And why we chose to do that right now in our life cycle is on the structural side. Now, if we have 200 million shares out, we're going to have problems as an explorer trying to maintain a market cap. I think it's important that we find revenue streams. And as an explorer, that's almost impossible. The only way to do that is to bring in partners. So we've cut a deal on our Macumba project in Burkina. It's 2.25 million over 4 years. The payments escalate. And they'll earn 100% of the deal if they follow it through 100%. We have a deal on the table for one of our Canadian projects that is similar in structure. So if we can do 2 or 3 of these, I think by the 2021, 2022, we'll have $500,000 to $1.5 million coming through the deal as revenue, non-dilutive revenue. That keeps us moving. That's money we can put into project development and pay listing fees and pay legal and all the things that we pay.
Right, project generation. Nothing wrong with that model. If you're very clear about it, you can make money. The difficulty comes, I guess, is you get the money into the company, and the company spends the money internally on G&A and whatever activities it's pursuing, and kind of there's nothing really in it for shareholders. So how do you try and change? Well, what the current trend, which is the shareholders are not making much out of this. How do you change things around with that particular model?
Right. I think it's important that when you mention that yes, they are directly related to that. In 2 years, there's less need to dilute, less need for equity financing or debt financing if we have revenue coming through the door. They benefit from that.
But there's no scale. There's no. What's the blue sky here? Sitting at a kind of static level. Project generation, great, but I assume it depends on the way that you negotiate these things. If you can get carried for some of the things, that's great. I can do the math on that. But is that the plan though? I mean, you could tell me. Where's it come from?
Yeah, not all of our Canadian projects. A portion of them. Our Canadian projects are really the Mackenzie project in Red Lake. That is our priority, as well as our new pilot project here in British Columbia. And we have some Eastern Canadian projects in Newfoundland that we like as well. Earlier stage, more grass, greenfield, if you will. But we like the mix. And the mix is if we can farm out 2 or 3 projects or 4 projects over the course of the next year or so, that'll set us up a year, 2, 3 years down the line for steady revenue. And we think that's important while we're exploring. Mackenzie, for example, in Red Lake, for a new pilot here in British Columbia.
Beautiful. Okay, I like the model. Great. So what's happening at Mackenzie? How much money have you spent? What have you done? What do you know?
Right. We've acquired it. We've done a little bit of work on the ground there right now. We're working with a company called Remuneration. They are the same company that Great Bear Resources works with. They're quite good. And we're in the process right now. We've applied for drill permits. We should see them within the next week or 2. It's been, well over, I want to say 45 days now. So we'll get them very quickly. We know they're coming, and we have money put aside for an initial drill program.
Oh, so
we'll do that as soon as possible.
But you have no drilling data today, but you put some money aside for some drill activity, but you're waiting on permits. Right. Okay. Right.
Now, I should mention the historic work. We have the historic drilling. We have the historic sampling. Very high grade. It looks fantastic from an above ground visual, and a little bit of the work that's been done on the drill side. But it's a great target. It's in the heart of Red Lake. Red Lake has a lot going for it, obviously, and it's a good place for Nexus to be, particularly as an anchor project in Canada.
So what do you know? What did you buy into? What were they able to tell you with this historic information that you thought, well, this is worth shares? Yeah,
there's 4 different mineralized zones on the project. It's a 1,300 hectare project in the heart of Red Lake, and there's some, the samples. visible gold samples at surface up to 331 grams per ton. Some of the drill holes, and there's only been a few done, have intersected high grade as well, but very thin vein-like intercepts. So we'd like to, develop the project. We think it's in the right place. One drill hole that does well in Red Lake can change the trajectory of this company instantly.
But you're a pessimist, so don't think like that.
Somewhere between Carnival Barker and, I don't know. It's a tough job.
Right. Okay. Back to normality here. So, how many shares do you own? What percentage of the company do you own?
Yeah, I took a big haircut after that 10-1. I had about 5 million personally. I'm way down. But friends, family, close associates. I mentioned that with a little grin, and I'll explain why. But probably got in the neighborhood of 20-25 million between my family and close friends. That's a double-edged sword, because it sounds great, but when things aren't going well, it makes socializing with those friends and family awkward.
Sure.
So I have a remarkable incentive here to deliver.
Okay. But just
we're invested.
So friends and family, 25 million, get it. But what do you and the management team own as a percentage of the company today?
Somewhere in the neighborhood, hard to know for sure, but I would say somewhere in the 6 to 10 million share range.
6 to 10 million shares. Okay. And are you guys paying yourselves? Are you guys paying yourselves at the moment?
Yes.
Right.
Oh yeah. Very small amounts in consideration of this business.
Like what? Save me looking it up. What amount are you paying?
7,500 a month Canadian for the CEO and 7,500 a month for our vice president of exploration. Less for CFO and admin. So relatively reasonable salaries. Yeah.
No, that's fine. And you're the same level?
Oh yeah, 100%. 7,500 a month.
Okay.
I'm very open about that.
Beautiful. Okay.
No expense account.
That's not crazy. Okay.
No, and our little office in downtown Vancouver is a $2,500 a month office. It's small. I don't have a receptionist. If you knock on the door, I'll answer the door. If you phone the office, I'll answer the phone. So, we are lean in that regard. You're not hiding behind layers of IR and like that.
Okay. This is no lifestyle.
In fact, I've given my cell phone number out to too many people. So that's a bit of a curse, but listen, I like direct conversations with shareholders.
Okay, and what are they telling you? What are they concerned about?
The usual concerns: dilution, more drilling. How are you going to raise money? What's the end game? I took a lot of heat in 2019 when we were acquiring projects. We spent 2019 on a bit of an acquisition binge. And I did that on the idea that gold would get stronger. We'd have a better market in 2020. Little by what else would occur. But certainly I thought we would be able to unlock that value, buy cheap, sell high, and give us that project generator model, which I think is important if all goes well. I mean, just having an income, actually running an exploration company like a business with revenue. I thought a hybrid explorationist would be a good way to end up, and we're close. If we can get into year 2 or 3 of these deals we're making, we're going to see that.
Okay, and again, those are conversations which I guess are hanging in the air at the moment, given the current environment. Yeah,
I think. Listen, all the people. No one has said we're out. We're going. We're never going to do this again. Everybody knows things are cyclical. Everything comes back. It's people really at this point, it's let's deal with isolation and the things we're dealing with right now for the next 30 or 60 days. Everything's on hold, but I imagine sometime in the next 3 months or so, we're going to start to fight our way out of it.
And how do you say, here's a question for you, because it's always fascinated me, because I've seen this go horrifically wrong, is how do you, with the project generator model, select the team or the group or the company, private or public, that you can trust to be able to deliver that value? Because invariably, I say the numbers aren't spectacular for exploration companies, right? There's a lot of lifestyle companies out there. People use it as a mechanism to go and raise some capital, have some fun for a couple of years, and go on to the next thing. So, what's that decision making look like for you guys?
Obviously we do our due diligence when we are in discussion, and there's a level of risk always. You can cite companies that have a large partner coming in, and the large partner decides to change course. It's very hard to judge and to understand and know exactly how the partner company or the joint venture company is going to behave. But there's milestones, and there are requirements to earn their way into the projects that if they're met, it's fine. If they're not met, the project comes back to Nexus with their capital, having worked to develop it, and some small payments early on, but larger payments to the company later on. So that's the risk we take. The downside is if they walk away or are unable to meet the requirements for whatever reason, we can simply take the projects back. And I think that's an okay out if it works out that way. But I like the other side of it. The optimist in me says, okay, well, if we can get into year 3 or 4 of these deals, it's good for Nexus.
Okay, Alex, thanks very much for telling us that story. It's another gold exploration story out there, and it's got to, I guess, find its voice and catch people's attention. Burkina Faso is a fascinating part of the world. I know North Americans don't really know or understand West Africa, but it's a fairly prolific area. But you need money to be able to move that thing forward. Project generator model is interesting, but you've got to deliver on that to be able to capture any value there.
Well, we've got one deal done, another one pending here.
Right.
News in the next week or 2 on that. So if we're able to establish 3 or 4 deals, that's a viable path, and we've done our job.
Fantastic, Alex. Thanks so much for your time today. Stay in touch. If there is big news, pick up the phone, let us know.
I shall. Appreciate it. Thank you so much.